Good morning and hi. My name is Swari Perempuan Yechun and my metric number is 285657. I will present the financial ratio analysis of 7-Eleven Malaysia Holding Berhad from 2017 to 2021 in terms of profitability ratio. In this profitability ratio, there are many types of ratio that can be calculated, which is profit margin, return on asset ROA, and return on equity ROE. Based on the graph stated, the profit margin over 5 years show an inconsistent situation. For example, there are an increase as well as a decrease in a particular year. Next, the return on asset ROE also having the same situation, which is there are an increase and decrease for a particular years. For example, there is an increase in 2018 and decline in 2020, but an increase again in 2021. Lastly, the return on equity ROE. In this case, the graph has displayed that ROE continuous decline from 2017 to 2020 and it has increased in 2021. Now, I will continue with the solvency and coverage ratio. There are many ratios that be used to measure and analyze the solvency ratio, which is total debt ratio, equity multipliers, long-term debts, and time interest earned ratio. As for the total debt ratio, there are also decrease and increase in a particular years. For example, in 2018, there were decrease and increase in 2019, but further decline in 2020. Next, equity multiplier also having the same situation. For instance, between 2017 to 2018, this graph shows a decline, but in 2019 increased. Then, in 2020 and 2021, the equity multiplier has decreased again. After that, from 2017 to 2019, long-term debt was declined for the year, but started from 2020 and to 2021, there has been a steady increase. Finally, the time interest earned ratio also increased and declined over a period of 5 years. For instance, 2017 to 2018, the time interest earned ratio declined and in 2019 a bit increased, but unfortunately from 2020 to 2021 it has declined again. That's all from me. Thank you.
Hi, my name is Nurisha Faramiti Jupri and my metric number is 285854. So I will be explaining about the liquidity ratio. So let's look into the current ratio. As you can see from the graph, the current ratio falls steadily. Even though the current ratio drops year by year, this does not indicate the company finance is unhealthy. Maybe some transaction, such as long-term liability, may impact the ratio. So next, we move into the quick ratio. As the quick ratio kept going down between 2017 and 2021, the trend of quick ratio is not like the current ratio, and it's pretty good because the quick ratio can be anywhere between 0 and 2. This means that the company doesn't have to sell its inventory to pay off its debt. Lastly, we look into the cash ratio. As it goes up from 2017 to 2018, then drop until 2021. This shows that company doesn't have enough cash to pay off its short-term debt, and when we compare it to its current debt, the company has like cash on hand. That's all from me. Thank you.
Hi, my name is Dura Ambita Aziz and my metric number is 289568. Next, I will discuss the inventory management ratio for 7-Eleven Malaysia Holdings BERHAD from 2017 to 2021. According to the illustration, the inventory management started at 0 to 0.55 from 2017 to 2018, and then the ratio dramatically increased from 0.55 in 2018 to 8.66 in 2019 with an 8.11 gap. Next, the ratio dramatically decreased from 8.66 in 2019 to 1.1 in 2020, which is 7.56 different. Lastly, the trend continuously decreased from 1.1 in 2020 to 0.66 in 2021.
Hello and good morning to everyone. My name is Malaki Zairi and my metric number is 28686. Today I would like to present about 7-Eleven financial strength and weakness and how to overcome that. Okay, let me show the slide first. Based on financial data, 7-Eleven Malaysia holding BERHAD for 5 years, the strength of this company is that it has a large asset base, which provide it with a better solvency ratio. That happens because the 7-Eleven core values exemplify our customer relation strategy, understand, simplify, solve, and connect with the goal of improving customer experience. The 7-Eleven have performed various actions to understand and fulfill our customer needs, strive for their convenience, resolve issues, and engage in proactive communication. Okay, next, the 7-Eleven company show that the long-term debt ratio that has increased and even fluctuated. This increase in long-term debt on the balance sheet is primarily due to slowdown in commodity or oil prices and thereby resulting in reduced cash flow, straining their balance sheet. Next, the portion of a company asset that is financed by stockholder equity rather than by debt. Technology and innovation are national key economics areas that the 7-Eleven Malaysia company BERHAD has targeted in realizing growth. In line with this agenda, it has embraced technology and innovation as major strategic tools. The growth is transitioning towards digitalization by gradually empowering the entire organization with internet and application-based technology which will improve 7-Eleven operational efficiencies. Okay, the next part is the weakness of 7-Eleven company Malaysia BERHAD. 7-Eleven company Malaysia BERHAD is high day sales inventory that has fluctuated inventory ratio that always change and are not stable. That means 7-Eleven company Malaysia BERHAD inventory ratio analysis relates to how well the inventory is being managed. Then 7-Eleven Malaysia BERHAD is not very good at product forecasting. It pays a higher premium for opportunities to research its rivals. One of the reasons why 7-Eleven stock is often excessive in comparison to its competitors is that the company is not always good at anticipating calls. As a result, better stock is maintained in residence and in the channel. The part is the solution to 7-Eleven Malaysia BERHAD to reduce the financial weakness is to do some good advertising and marketing. The items promotion and marketing had a lot to be desired. Even if the product is a success in terms of sale, its positioning and specific promotional proposition are not always well articulated, which can lead to attack on the aspect of the competition. In our view, good marketing allows you to collect data and metrics to understand more about your target audience so that your plan and advertising may be more focused.
My name is Sutima, anak perempuan Ahnan. My metric number is 28683. I will present the last part, which is conclusion. In conclusion, we can say that financial ratio analysis is an important tool in evaluating the performance of 7-Eleven Malaysia Holding BERHAD. It reveals the strengths and weaknesses of the firm. It helps investors decide whether should invest in this company or not? This is because investing in any company involves a lot of risk. So, before putting money into any company, we must have a thorough knowledge of its record and performance. In this assignment, taking into account all the findings, it can be said that investing in 7-Eleven Malaysia Holding Berhad is not a good option. This is because the profit ratio is declining throughout the year except for a few years that increase. For example, 7-Eleven Malaysia Holding Berhad declining return on equity indicate the company is becoming less efficient at creating profit and increasing shareholder value. Nevertheless, there are also increasing ratio but in small percentage. For example, the company also show a slightly increased solvency ratio, resulting in the company ability to meet long-term debt and continue to operate in the future. Furthermore, 7-Eleven Malaysia Holding Berhad inconsistency regard the inventory management ratio, which only had higher inventory management ratio in 2019 from the 5 years period. So we can say that investing in 7-Eleven Malaysia Holding Berhad is not a good option. That's all from me. Thank you.